Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to be talking a little bit about what we can expect in the coming few days on the markets. It's a great day to game plan. We're seeing slow price action really across the board, at least in the U.S. equities indices. And it's an interesting dynamic because we really were expecting more action, and we're not getting it. We're not seeing much action at all. Right now, the Dow is just chopping sideways. The S&P 500 is chopping sideways. The NASDAQ is definitely sort of the big gainer, I guess, up about 0.5%. But what we really want to focus on is those metals markets. I mean, this has been the story of the year. We had a pretty good bead on the gold market. We talked about that monthly pennant, that monthly compression right around 3,500. Once that broke, the sky really is the limit. Nobody knows where the top of this gold market's going to be, and I'm absolutely fascinated. I mean, our call, sort of been on record a lot saying 4,000 is probably our next destination. We might get there relatively quickly. Right now, we're printing about 36.41 in spot gold. Gold futures are up there around 36.81 December gold futures. So there's a lot of action there in the gold market. Now, gold's going big. Silver right now is broken up over 41, and you've got another tremendous rally of about 0.75%. Gold's up 1.5% today. So really, the big story is commodities. I was looking for more action in the U.S. oil market. Today's just sort of a dead fish. We're up about 0.5%, but I don't really see the huge move that we were expecting off of that OPEC meeting where, well, maybe the global supply of oil dynamic is at least going to go under a big-time change here in the next few months. We're expecting more supply out of the United States, but the production just isn't there just yet. And I think it's an interesting dynamic for oil as we roll in to the winter months. So I still am liking $55 crude oil at some point this winter, but we just got to really dig in and try to figure out how to trade this properly or else we'll get chopped up. So that's the idea, make the most out of our money, most out of our opportunities. This week is all about inflation. We're going to talk about that as well. It's good to see everybody back in the room. Team Marina, good to see you. Team Marina, yes, sir. Good to see you. Yes, sir. Welcome. Let me see. This is a great day. If you have a market that you want to look at, just go ahead and plug it into the live chat. If you have live chat access and how to trade, go ahead and drop me a line there. I'm more than happy to look at any market you'd like. And if you're out there in YouTube land, just go ahead and drop it right there in the live chat. We've got one for the U.S. dollar, Japanese yen. Yeah, we're going to go ahead and take a look at really anything you guys want to do. We're going to take a deep dive into the gold technicals, though. A lot of questions on gold. Where's it going? Where's it headed? I think it's going to 4,000, and it could happen fast. it could happen fast. Tina, good to see you. Tina, welcome. Bobby Bob, always a pleasure, guys. Okay, let's get right out to price action here. Here's our 920 crossover strategy. We talked about this on NFP Day last Friday. Absolutely brutal jobs report. And take a good look at what we had develop. You had a sell signal essentially develop here in the dollar index. So this is the U.S. dollar index. We're looking at about 97.62. Fascinating sell-off following what probably was one of the worst jobs reports we've seen in a long, long time. There's palpable panic in the markets right now. A lot of people believe we're going into a deep recession, and the only thing that could stop that would be a big-time interest rate cut. We're going to talk about our expectations in a minute, but I am fascinated by what's happening here. The jobs numbers were incredibly bad. There's no way to sugarcoat that. They were bad, and the downward revision to June that actually put a negative jobs print on the board for the first time since COVID, since December of 2020. Really fascinating stuff, and there's a lot of scuttlebutt in the White House right now. There's a lot of people that believe the numbers were cooked, that this was one last partying gift from the Bureau of Labor Statistics, the folks that all got fired. There's a lot of people believe they were rigged. I don't know that they were rigged. I don't know, but we heard promises about the numbers are going to get better. The numbers are going to be more reliable. Oh, man, I just don't know where we go from here trying to really handicap these jobs numbers, these jobs reports. CPI is the big one this week. Is anybody going to believe the CPI number? I don't know. I absolutely don't know. Let me see Daniel Tarimo. Good to see you, Danny. Andy Tong. Let's see. We've got gold. We got a request for gold there. We've got Great Britain pound, Japanese yen. Okay, so we're going to be looking at the dollar yen, the pound yen, WTI crude oil. Let me see. Arun Patel, the jobs report was manipulated from the Trump administration to cut the rate. I think that it's a possibility, Arun. I mean, one of the things as a trader you need to do is you need to be flexible in your thinking. I'm willing to admit that there's a lot of things going on with the numbers right now. I don't know that they would doctor the numbers or that they needed to. I think that putting the pressure on the FOMC, the way that the Trump administration is doing that, is probably going to get all the rate cuts they could ever want. We know pretty much for a fact. I mean, I can't say for a fact because I don't know. I wasn't in the room, but we knew that the jobs reports that we've seen come out probably over the last 2 years, the revisions were always huge and they were always really questionable numbers. So I think this is something we've been talking about a long time. I've been live streaming for almost 4 years with you guys now, 3.5 years. I've talked a lot about the jobs numbers being cooked for a long time, no matter who the president was. And I firmly believe that they're not very accurate. So I don't really know how they're going to shore that up. The CPI number is the big one we're going to be watching this week. I'm going to break that down for you here in a minute. All right, dollar yen. This is a 920 crossover on a 4-hour chart. You can see what happened and why holding positions over the weekend can be very, very risky. Very risky. So dollar yen right there. There was the big break that we saw on those NFP numbers. Sold off, and then we came right back and opened really gap higher. You opened gap higher yesterday afternoon when the Forex restarted business on the 7th. So anytime you hold anything over the weekend, you've got to be ready for anything on the open. That right there is a tremendous move because the yen really was positioned to sell off, and we got our signal right there. But we said, listen, if you're going to take these things over the weekend, you got to be ready for anything Monday. And right there, you could see we went off the board. We closed right around 147.50, somewhere right in that zone. And then we opened right in there, 148.18. I mean, that's a tremendous move higher of almost 60-something pips. That right there can really hurt you if you're not ready for it. Don't get hurt by those opens. You've got to be very careful unless you have a strategy for it or you have deep pockets and you like holding positions over the weekend. You got to always be ready for that stuff. Now, as far as the dollar yen goes with the Fibonacci's, I'm more than happy to just give you my opinion on it and what my levels will be for this week. I think that you're probably going to be looking at an interesting type of a dynamic. You see really sort of a rotational market here today, but what we're looking at is that long-term golden zone. So let's back up to the monthly. Now you can see we're very, very sort of compressed. I mean, we don't really look like we're going much of anywhere. That is a non-committal trade if I've ever seen it. We're right between the Bollinger midpoint that I have out there at 146.84, and then you've got a topside 13-month EMA is up there at 148.28. I mean, this is in complete rotation. So are we ever going to get a breakout of the yen? I mean, we've got some great movement back here, but it's been relatively tight really since going back to your April sell-off, your April panic. So we really are just sort of rotating sideways, meaning the market is flat. So if I was trading the yen this week, I would want to see a move. And if you do get the move and you're liable to get one on CPI, something like that could be pretty good. So right there, you've got 38% at 146.71. That also lines up beautifully with my Bollinger midpoint, which is at 146.84. This area right in here, be cognizant of it. That is big-time downside support. And if you do get that sell-off to develop, potentially you could see a breakout beneath August's low. And when that happens, then it gets fun. Then we start looking at buying 144s. I mean, that's pretty much a no-brainer. The back end of the golden zone, 144.25. Fantastic support zone right there. But 38%, 146.71. That's a big deal. So if you're trading, if you're trading the yen and you're positioned, either you're to the long or the short, I probably would rather be long just because we've got great support here. But I don't really want to be long from right here. 147.72. I mean, you can feel free to take the trades if you guys want to take them, but I just don't see anything in there that leads me to believe we're going to get a break. Probably going to be waiting on those CPI numbers and PPI. Those are going to be out a little bit later this week, and we're going to go preview those. But this right here, very, very difficult to trade efficiently. So be careful if you're trading the yen. Big number there, 146.75-ish. That's big. And if you do get that break beneath last month's low, 144.25, tough not to love that one. It really is tough not to love those levels. All right, Great Britain pound, Japanese yen. 200. We talk about key numbers a lot. We talk about all the different things we need to do to be successful traders. One of them, very, very high on my list, is understanding the key level dynamic. Absolutely critical that we understand the key levels and that you have them mapped out on your charts and that you know what is likely to happen at a given level. And you say, Shane, well, how do I know that? Listen, we knew action was going to come into the market at 200 in this pair. We absolutely knew that. We'll take a good look at it. What's happened? You can see we tried 200. We really rallied up here back when the yen was just getting absolutely smoked. Big time correction. And now we're chopping sideways. And we have just been bouncing our heads off of 200 for the longest time. So what you have here is a situation where if we do get the break above 200, we're probably going high, very high. Now, I would be saying, yeah, you're probably going to challenge July 2024's highs up there at probably 208, something like that. The problem is 200 is very stubborn. The sellers are there. For whatever reason, the sellers are there. So right this minute, if I was trading this pound yen, you probably would want to have a bullish bias just a little bit. The turnover in Japan, in Japanese leadership, I mean, there's so much we could talk about that all day long, but it doesn't really change the fact that 200 is the 5,000-pound gorilla in the room, and we've got to really be aware of what's happening at that key level. Now, if we do get the break up above 200, then it's relatively simple. Then we just are going to be buying retracements. We'd be looking for a nice peak, and then we buy just like we're trading gold right now. So when we're watching this, 200 is the big thing. Okay, that's down. Check. We understand that. Now we go down to our daily, and we try to find out exactly what's happening. 200, 200, 200. I would be looking for a bullish breakout above 200, but it's got to go first. This would be a situation where you probably could buy a retracement here, but just don't get fooled into believing this is trending because it's not trending. It's very, very flat. It's tough market conditions. If you wanted to buy a pullback, I don't hate the idea, but make sure that you get a good one. I don't think I'd be buying 199.71. You don't want to get caught up. If this market falls apart and the sellers inevitably win at 200, you don't want to get destroyed on a big-time sell-off or a market correction. So you've got to be ready. Probably 199.71 is a little bit early for me. I don't think I would be getting in there, but maybe 199.32, the back end of that golden zone. Absolutely. You could definitely do something like that. Now, the big thing to watch here is that gap up. So today we opened at 210, 200.10, right? Well, what happened since then? We sold off 20 pips. It's tough. This is tough trading. I would wait. Be careful. Listen, caution's the better part of valor. You want to see the market break above 200 and get rid of 200. As soon as that happens, then we can start talking about buying retracements. That's very simple. Then the trading, it really gets easy. I mean, when you start putting in swing highs up here, then we're just waiting. We're drawing Fibonacci's and looking to buy from these levels above 200, with 200 sort of being the catalyst for the bidding in the bullish price action. That's how I would approach the Great Britain pound Japanese yen. All right, let me see right here. Arun, let me see. How many people? I got way behind on the live chat, guys. Let me see. Yeah, we'll look at gold next. We looked at the yen there. We'll look at gold, and then we'll look at WTI. Let's see. Andy Tong, when do you think oil will drop? Would you enter on the 920? If so, what time frame? If you were going to take a position on oil, and yes, I do believe it's going to drop. Now, the only thing that's really – there's a couple of things that are holding the crude oil market up where it's at right now. Number one is OPEC. Immediately, we know we're going into winter seasonality. We know that there's probably a big sell-off in here somewhere. We just don't really know when it's going to come. I would say that you'll see the real bearish price action in crude oil probably in October. So you're probably looking at like 3 weeks. Maybe another 4 weeks, and then you'll really see those prices come down in a big, big way. And I think that's going to be fantastic it's going to really help the U.S. economy. We know that. That will help inflation come down a bit as well. But I would say October. If I was going to trade a downturn in the WTI market and try to position trade it, meaning if I was actually going to take a position and try to ride a short down to 55 or something, I probably would be looking at a daily. If you were going to use the 920, I'd probably be looking at a daily, and you can see right there you got the sell signal back on the 6th of August, and it's been a pretty good trade. Hasn't been great. I mean, you took a little bit of heat there, but 64.25. Now you're down to 62.25. That's not bad. That's about $2. So I would say that, yeah, you have an opportunity there potentially to grab even more of this move, but you really do need to, I mean, I hate saying wait, but you really do need to wait. So if I was going to be playing this 920, I would probably be looking at a daily. Now, if you wanted to take a seasonal trade and try to time out the wintertime seasonality, you probably could be looking at a weekly. Problem I have with this right here, and you know I'm going to say it, it's a weave formation. This, look at, this was a buy, this was a sell, this was a buy, this was a sell, this was a buy, this was a sell. How do you know which one's going to really produce? You don't. Now, there's a couple of hints right here to stay out of this. Right in here. That's flat. That's a flat market, and you have to be very skeptical about flat markets when you're trading crossovers. That's just the way it is. This right here, we're starting to open up a little bit. You'll notice the shaded area between the 9 and the 20 is getting bigger. That tells us that potentially we're getting more, at least a little bit more volatility. You'll notice the weekly ranges, though, are very tight. I would say that you probably, Shane, what do you want to do right now? Long or short? I would say short. I would be holding shorts, but that doesn't mean that you can't get a big bump. Listen, Trump and Putin are meeting again supposedly later this week. Anything can happen to this crude oil market. I believe there's two things holding price above 60 right now. Number one is interest rate cuts and the dovish Fed. That's the first thing. The second thing is the geopolitical uncertainty in the Russia-Ukraine situation. That's it, and that's all. That's all there is to it. So if you do get a peace deal, and we've been talking about it, and really, I mean, I hate to say hope because hope is such an empty word when you're talking about war. But we've been hoping to get a peace deal in the shooting to stop for a long time now, and we don't. I just don't know that it's coming. I really don't. But if you do get a Russia-Ukraine peace, a firm peace, one that's going to potentially last for a while, you're going to see a downturn in WTI crude, and that's fantastic. That's what we all want to see. We want to see the market really fall apart going into those winter months, maybe base out down around 52, somewhere down around 50. That would be fantastic. That would be fantastic really for the global economy. You would see economic growth just based on lower energy prices. So that's a long way of saying, yeah, it's probably time to start considering going short, but anything can happen. You could easily get a kick back up to $65, and we'll go ahead and show you that, our levels here in just a minute. So let me see, XAU USD. Yeah, we've got a lot of folks that want to watch or take a look at the gold market. I'm going to go ahead and throw the Fibonacci's on the gold market because it's important that we try to really figure out, not just what we need to do from a macro perspective, but what we think we can actually trade today. And I think that gold, you want to make your mistakes to the long side of the market. There's no question about it. Now, when I say that, a lot of people get confused. They go, what do you mean making mistakes? Why are we making mistakes? What I mean is if you're going to lose and you're going to get beat in this market, you want to make sure that you're going with price action. There's no question about it. Since we broke out up over 3,500, I mean, the long's been the way to go. We had that long scalp that we did last week on NFP. If you missed it, go back, check out NFP Live, where we actually executed a gold trade, a real hot scalp, and it was a fantastic trade. Probably should have just stayed in it, But hindsight's 2020. But you want to be buying gold here. You don't want to be selling. Now we're going to go over exactly what I think can happen here in the gold market. We got a few things we have to talk about first, though. All right, bring your ambition into focus over at Switch Markets. If you do need a broker and you want to trade something like a spot gold, get in there. They have so many markets over there at Switch. There's a lot of value added here. We got some questions right there about the algo builder. I'm going to talk about that in just a minute. We do have a date for that webinar and when it's going to come out, and I will attempt to figure out exactly where you guys can find it. I'm not really sure yet where they're going to put it, where the Switch Markets folks want it, but we're going to talk about that in just a second. But definitely bring your ambition into focus with Switch if you're interested. If you're interested in trading it, for a retail trader. Switch has a lot of value. Algo Builder, Pine Connector, free demo accounts, MT5 access, you name it. They got a lot over there. So if you're an international client and you are, I guess, in a municipality that is serviced by Switch, check it out. Might be worth your time to maybe, I don't know. I have a few brokers. Maybe add Switch to your broker lineup. All right, let me see. Daniel Torino, is it all right approaching the market right now? We'll talk about U.S. oil here in a second. I'll get off on a tangent, but we'll look at some technicals as well. Let me see. Arun, how many people got fired from the data analytics research? They fired, I believe, they fired the boss over there, and typically when the boss goes, the whole crew goes. So I genuinely don't know. I know that they fired a lot of folks, but it really was about the head statistician over there got fired. That's just the way that it is. So typically there's a bunch of resignations and firings that come after the boss gets sacked. Sort of like if you fire a head coach, you fire a football coach, typically they either promote from within, which I don't think the Trump administration is interested in doing, or they bring in a whole new lineup. All right, let me see right here. Team Marina. Hey, Shane, any update on when you'll drop a primer on Algo Builder? Yeah, so the Algo Builder webinar, is, I believe it's tentatively scheduled for the 18th when that's going to drop. Now, we've got to be patient. That's really out of my hands. But it's about 25 minutes long, and I go through exactly how to build. I build a real basic strategy for you in Algo Builder. And the Algo Builder, the potential with this piece of software, there's things out there that are like it, but the potential for this piece of software, the top side, is big. It's going to let you guys use basic language, translate it into code, and then just drop that onto your MT5. And I do it all for you in the video. I show you step by step. We build a real basic RSI strategy that is profitable, or our numbers show the profitable. So we build the strategy, we run it on some back tested data, and it spits out performance analytics. Then you export the code, you put the code in MT5, and essentially you can automate. So I really liked the webinar. I watched it the other day. I thought it came out good, and I think you guys are really going to like it. If you don't, that's okay too. Don't worry about it. There's going to be more. There's going to be a lot more content, I'll tell you that. So we're working on quite a few things over there at Switch. So you're definitely going to want to check out that Switch Markets YouTube channel for sure if you're not already over there. A lot of stuff coming out there. Let me see right here. Let me see. Check out the gold market. How do I approach it, Daniel? Yeah, let's go ahead and just get back to gold. Tina, could you have a look at the U.S. dollar, Canadian dollar short trade at pulling back? Yeah, I'll go ahead and look at the dollar CAD. Remember, it really does tie into what we're saying on U.S. oil. That's absolutely huge. All right, let's go ahead and look at gold, and then we're going to talk a little bit about CPI and PPI. You can see right here this daily chart for the gold. I mean, we had a nice pullback there on the 4th of September, and then you got the big banger on NFP. NFP was absolutely horrible. So the rate cuts have driven gold way up. This would be an easy read for me, a very easy read. There's your spike low. I love that. What do you guys think happened right there? You had a bunch of retail traders that were long, and they got stopped out right beneath that daily low. No question about it. So you saw sort of a flash. What we call that a flush. Essentially, it flushed out all the retail longs. Well, some retail longs got stopped out there. And then what does the market do? It flushes out everybody that doesn't have the cash to hold that position, and then it rallies. We see this over and over and over and over again in the markets. It really does sort of speak to how the markets function. I mean, I love the markets. I've been doing this a long time, and if I didn't love them and it didn't fascinate me really every day, then I wouldn't do this kind of work. I would go find something else to do, and I don't know what, but probably get back into the construction industry. That's where the big money is here in Montana right now. But you have to understand how markets work, and I'm not going to be negative about it, but just understand that the markets are out to get as many people as they can. And if you're not sophisticated and you don't understand things like key levels, things like where people are likely to get stopped out, this is clearly a stop. It was a stop hunt. That's the only negative day. Take a look at that. That is the only negative day, and how many in a row? Well, Shane, that's a negative day. Yeah, but it traded inside. It traded inside of the previous candle. This one actually broke symmetry. So we broke symmetry right there too on the 26th of August, stopped out everybody, and then what happened? Boom, up. Rally. Okay, now what do we got? Same thing. Pull back, bang, knocked out a lot of the retail, and now we're heading higher. A couple of observations. Number one, you're outside of that upper Bollinger Band. That is bullish. Okay, we're trending. We've broken out. So how do we want to trade it? We want to make our mistakes to the long, meaning we want to buy. I want excuses to buy. So if I was looking at something like this, hopefully, I got to stop saying hope, but if we get a top to set up, then it's as easy as buying a retracement. So right now we're looking at about 36.46. What do you think happened right in front of 36.50? There were some sellers. All right, so now you've got a potential pullback there, maybe to 35.95. I love it. If we get a chance down there, that would be great. Now, if we want to be more aggressive, we just keep dialing the time frame down. So if you were on a 4-hour chart, you can see this compression right here. Nice break. Compression, break. I mean, that's fantastic work. What do we want to do now? We still want to buy it. The daily chart, those levels in a trending market are really tough to beat. They're really tough to beat. 4-hour chart, though, Yeah, you probably can justify taking a long trade here. You can see you're outside of that upper Bollinger Band. Spike low to sort of your upper extreme right there. So right from this trough to this peak, 36.20. Yeah, probably if you get a chance there, yeah. So it's really all about getting a swing high to set up so we can get in our pullback. Now, I could show you the 920 for this. You don't need to see it because we really just are trending. We've broken out, and it's bullish, bullish, bullish. So right now, we're going to go ahead and forego that analysis. But where could the next topside target be? Your all-time highs. We're making all-time highs every day now. That means that the market is trying to find a level. It means we're trying to find an area where there's sellers interested. We're just trying to find an area of fair value. That's it. Right here, we thought we had one. Compression right there, at least for a few hours, we traded right around, 3,600, and then we broke. Right now, I would say that probably your next port of call is going to be 3,750. Pretty safe bet you're going to get up there. Do you get up there this week? You could. CPI and PPI can definitely drive action. All right, there's a few things that we got to say here. French Prime Minister Francois Bayrou ousted. Wow, ousted in confidence vote. Unbelievable. A lot of political turnover right now. A lot of political turnover globally. We are in interesting time. Interesting times. As far as what's that doing to the markets, not much. As far as what we need to know this week, we need to know about inflation. That's for sure. Let me see. Let's go ahead and check. Let's take into the market here, and then we'll go ahead and break down our inflation and see if we can maybe point out a few things we need to watch for the week ahead. Let me see, Tina. Could you have a look at the dollar CAD? Yeah, let's go ahead and have a look at the dollar CAD. We'll take a look at this on the Fibonacci's and the 920. 4-hour chart. Tough market structure. Tough market structure. We sort of pulled back right there. We've got a big up, pullback. Do we like it to the long or to the short? Really hard for me to commit either way. Here's what I would be saying if you're on a 4-hour chart. You probably would be looking at this moving average down there, my 13-period EMA, 138.16-ish. That's pretty big. I would be looking at that zone as potentially being a support zone. But as far as how I would be looking to trade this one today, I probably would be looking at a daily chart just to try to figure out what's going on. You can see that's a long-legged doji. Right there, you got sort of the top side and the downside and then the rotation back into the body. And now we're trading inside of the doji. So we've got a doji, a long-legged doji, and we're trading inside of that. That is an, according to Hoyle, flat market. So, Tina, really difficult to pick a direction. Stick to your risk management. Stick to your risk management, and if you get chopped up and you lose, you lose. That's the way it is. That's what we do. We trade. We win some, we lose some. We just keep coming back and fighting. That's the idea. So make sure that you don't lose a fortune on the trade. Stay within your guidelines, your risk parameter guidelines, and just take the trade and see if it pans out. But for me, I would look at this and say, I am not interested. And the reason why I'm not is just very flat. Now, the strategy you may be employing may be designed to really capitalize on flat markets, and that's great. If I was going to look for an intraday trade today, probably would be bidding right around that daily moving average down there at about 138. If I got to pull back to 138, you probably could fire your guns from there and take a shot from there. But is it the best thing to do? Probably not. What you would love to see is maybe this market breaks out. So if you got it to break, north or south, then we have a chance maybe to bid down here or maybe sell up here. The Bollinger Bands say it all on the daily. Flat. They're parallel, very, very flat. Very flat. So anything can happen. Dollar CAD, remember, crude oil is big. So if you see a big break in crude oil, you're probably going to get a move out of this dollar CAD. So just sort of where we're at right now. It's a tough trade, though, for sure. Arun, PPI out Wednesday and CPI on Thursday. Yeah, let's talk about some inflation. Let me see. Blue Mango. Hi, Shane. I hope you're well. What is the name of your 920 indicator on TradingView? I didn't print it publicly. I didn't publish it publicly. Where you can find the code is just go to the video, the coding the 920 strategy, using AI to code the 920 strategy. Go there. I've put the code right in the live chat. So you go down, read some of the messages. It's a reply to one of the pinned message there. You just go in there and you'll find all the code. I left it right there for everybody. So it's in the comments section. Go check it out. But I'm doing well. Yeah, hopium. Haroon, hopium drains a lot of bank accounts. Let me see. Tina Xing, entry at 138.21. Okay, listen. What needs to happen here is you just need to get rotation back down into this daily range, which you can completely get. So I'm not against the trade. What so much? I would view it as a higher risk trade just because we're really flat. We just looked at the gold chart. those are pretty low, low risk. Those are high probability trades. You just got to be able to get a pullback. This is a lot different. You can get really choppy in there. You don't really know which way price is going to go. So you definitely want to be careful. Don't be careful with your risk management. You don't want to put too much on that trade. That's for sure. Let me see. Switch. Let me see. Blue Mango. Switch has the fastest withdrawals when using crypto. A great broker. Yeah, I mean, I talked to the back office folks there quite a bit, and they really like to service the client. It's all about value, and there it is. Thanks, Blue Mango. I sure appreciate the thumbs up. Let me see. Shame you used AI to trade. Yeah, eventually you got to use AI. We're getting into it, anyways. Let me see. Caesar Padilla. Thank you, Shane, for this powerful videos. You're a good teacher. San Francisco, California. Well, thanks, Caesar. I haven't been down to California in a while. I have some family that actually had a lot of family that was from the Bay Area back in the old days. Not so much there anymore. They all sort of moved out. T Marina. Yeah, Algo Builder's pretty cool. Been doing some trial and errors with it already. Fantastic, T. Good to hear. The cat and oil, Tina Jing. The cat and oil. That's what it's all about. Canadian dollar oil. Let me see. 18th. Start looking for the webinar on the 18th. I'll get the exact details and make sure that I drop links, and you guys will know exactly where to find it. Let me see. Andy Tong. I tried to make a 920 buy on the 15-minute and a sell on the 1-hour crossover. Unable to make it work. Maybe something you could look at when looking at the algo. Yeah, we're definitely building that. That AI is still evolving. That technology is still evolving. So there is a lot of trial and error there, but it really can get you thinking and build something that you could use. Let me see. Arun. 3563 is a good level to get in long. I mean, buying gold, you really can't miss. The only thing is that there will be pullbacks, and that's the problem with just diving in and buying. Okay, this is a trade right here we talked about last Friday. No question about it. You've got the reversal. This market did reverse. The Euro USD did reverse. Rate cut mania here in the United States. When they start slashing interest rates on the U.S. dollar, it's anybody's guess how low they're going to go, especially with the turnover at the Fed. 2026, it will not surprise me if we go to 2%. 2% interest rates here, and that is very, very low. That is very, very low. So I don't know. I still have to really sit down and think. Sometimes before I say something, I need to go sit down in a dark room and really think about all the different ways the markets are going to behave once we start slashing interest rates here in the States. But you definitely are starting to already see it in the U.S. dollar. I mean, dollar index is at 97.58. There was your week NFP report. There's your break. We talked about the stop loss on this daily bullish trend line. And you can see right there, that was the liquidity sweep that developed when Jay Powell was at the Jackson Hole Symposium. All right, that was it. And we challenged that trend line, and we sort of fought, and we fought, and we fought, and it just didn't happen. You have to stop yourself out now. I mean, could it rotate back down? Yeah, but there's no reason to believe that you're going to do that. More than likely, the way to trade the Euro USD moving forward is going to be, okay, this is flat. Now we're breaking out. We're breaking out above that upper Bollinger Band on the daily. So something like this, what do you think? You're probably going to be buying pullbacks. You can see how the symmetry of the market really is. I mean, it's a beautiful symmetry, pulled right back to 38% and now rallied higher. So, you could have got that trade earlier today, 117. It's not an accident that these key levels are hitting on these Fibonacci's. That tells us that there is an order in the market. And it gets deep into fractal geometry and things, and we don't need to talk about that. I mean, this isn't a geometry or mathematics class. We're traders. But when you start to see things like Fibonacci levels, Fibonacci retracements hitting on those key levels, that means there's order in the market. And immediately we say, okay, something's happening here that we can really cash in on, capitalize on. And something like that, 117 is going to be a tough one to beat. That's going to be a pretty darn good support level. I would love to see this thing tick a little bit higher and then maybe retrace, give us a shot to get in with some conviction. So I think it's going to be fantastic. Let me see. All right, guys, let's go ahead and talk a little bit about CPI and PPI, and we'll go ahead and put a pin in it, and then I'm going to give you the schedule coming up for the next several weeks. The economic calendar for this week, you can see that there's a little bit of GDP out of Japan. That was the big news. It's not really a huge market driver. In my view, it is the reason why some of those yen pairs did gap up, though. As far as what we're really looking at this week, CPI and PPI are everything. Today, we saw a little bit more dovish sentiment right here. Our 3-month T-bill and 6-month T-bills, those went under 4%, really starting to tick down, suggesting that, rate cuts are coming in a big way. At least the long-term investors believe that, and they're starting to act with conviction, and that's absolutely huge when you start talking about interest rates and yields, bond yields, and everything. In any case, Wednesday, I believe the fun kicks off on Wednesday. You're going to be looking at core PPI, something like that. You're going to be looking at 0.3%. That's what we're thinking, down from 0.9. We're really expecting these numbers to start dropping. I don't know. I just don't know. I don't know what we're going to get. I don't know. Crude oil inventories are out Wednesday as well, but really the big number here this week is going to be CPI. It's going to be CPI. Now, we're not going to have CPI live for you. I'm going to be on the road. We'll talk about that in a second, but here's the core CPI numbers and the CPI. So CPI, we're looking for 2.9%, and we're looking at 0.3%. So we're actually expecting the consumer price index to rise, and we're expecting the core numbers, the core CPI numbers, to hold firm. I don't know. I have no idea. None. You know, the NFP number from last week was a shocker, an absolute shocker. And it really did ensure that you're going to get interest rate cuts in September. So right here, what do you got? 88% chance that you get one rate cut. We're starting to price in maybe a half point. I expect this to go up. And now if CPI comes in sort of in policy in line with expectations, then you probably will see this go up, the potential of cutting a half point. You may get that. So interesting stuff here on our interest rate expectations. And then the 10th of December right here, last interest rate move of the year, we're starting to price in, about a half point, 3/4 point rate cut from where we sit right now. That's a significant reduction in the federal funds rate. So that probably, in my view, is going to be Jay Powell's last meeting. But I don't know that for sure. His term's up next May, but I don't think he's going to be around. I really don't. So that's sort of what it is. That's what we're looking at, guys. An aggressive rate cut cycle. It all starts this week with CPI. It started last Friday with NFP. And now if you get a CPI number that the bankers feel like they can work with, you're going to get the rate cuts. They're coming. All right, let me see. T. Marina, hi, Shane. Can we have a look at AVGO? Yeah, and then we'll take one more market. That'll be AVGO, and then I will go ahead and break down what's in the future here for the trading room and for our live stream schedule and everything. All right. So you had a gap up here. Now, I'm one of these guys, one of these traders, that believes in gaps. There's a couple of rules in trading. You know, if it makes money, it's the right answer. Yada, yada, yada. Simple's always better. Gaps get filled. Gaps get filled. Gaps get filled. I consider a gap if it hasn't been traded in like 60 days, 90 days. We'll take a look at AVGO right here. Broadcom Incorporated, whatever that is. What is it, a cable company it sounds like, or some communications, maybe a chip maker? This is a gap, no question about it. And what I mean by a gap is that's a void in price action. That is an area that has not been traded. So think of the markets as a debate. Okay, so when we're in there, and if you guys watched the live stream last Friday when I did the live trading, I was just talking aloud, and I was talking about the numbers. You bidders, hit the ask, hit the bid, hit the bid, hit the bid, hit the bid, hit the bid. We got to get legs in here. That stuff. That's what this is. This is an auction. Now, it's digital now. We're not in the pits. We're not sitting around raising our hands, and I'm not yelling at you, and you're not yelling at me. But what we're trying to do is we're trying to figure out what the heck something's worth. Now, it takes two to tango. Buyers and sellers meet, and that establishes the price of something. So if I'm buying here and you're selling here and we can't figure out a way to meet in the middle, we either A, won't do the deal, or B, the price will either stagnate completely. We won't do the deal. Maybe someone else will step in and suck that liquidity up or provide liquidity. But what happens is if we can't see eye to eye, there's a problem. There's opportunities in that problem. This gap right here suggests that nobody wanted to do business at 325. Nobody. You didn't really have any buyers there. You didn't have any sellers there. You dang sure didn't have any sellers because we opened higher. So the bidders said, well, it's worth a lot more than 325. Well, is it though? Maybe, maybe not. What's going to happen at down on 325? Is this area going to be tested? More than likely, yes. What does that mean? It means you're probably going to sell off from current levels and at least take a peek at that gap. So if I'm a trader, and I am, I love the bullish price action. You can't really short unless you have that type of market access where your broker will give you a loan to naked short and whatever. That's complicated. I don't want to encourage really anybody to do that with stocks unless you have the cash to do it. You need a lot of money to be doing that stuff, and it can be very, very risky. Shorting stocks is a lot different than, say, shorting a futures contract or something like that where we just get in and get out. So if you have like an AVGO CFD price, CFD market access on these individual stocks. I know Switch Markets has a bunch of stocks that they let you trade long and short on CFD style. You can check it out. Maybe AVGO's in the lineup. I really don't know. But what I do know is typically these things get filled in. So if I was looking to trade this thing, I'd be a bidder, probably down around the bottom of this gap. I would wait for the pullback. Clearly we're bullish. pull back maybe 315-ish, 320-ish, I think that you could definitely cash in and really give that a go. Probably going to be pretty good, guys. Probably going to be pretty good. Interesting stuff right there. Interesting market, AVGO. Interesting. They're a chip maker. T Marina, got it. Great Britain pound, Japanese yen gap, yeah, it's there. Okay, guys, I'm going to go ahead. I got literally a million things to do today. So I'm going to have to get trucking. We are going to have out the newsletter. Be on the lookout for the newsletter. I believe I'm not sure what the market of the week is just yet. I got to dig into it. You probably may get a trade idea later today. You may not, just because I'm sort of spinning plates over here. Got a million things to do. I'm going to be gone for a while. We're going to be, like I said, I'm getting ready to travel abroad. Sort of a big deal, leaving Montana. I don't really do it very often, or leaving the United States. I don't do that very often. So I'm going to be traveling to Europe. It's going to be a good time. I'm going to meet up with some of the folks actually from Switch Markets, and we're going to talk a little bit about how we can bring more value to the traders. Also going to be doing some team building things with some associates, so it ought to be a lot of fun. It's just going to be a tremendous amount of travel. From my perspective, I can see probably the next live stream being like the 18th, 17th or the 18th. I'm hesitant to schedule it because planes get delayed, travel gets delayed. Anything can happen. So I really don't like scheduling streams and then having to change them. I don't like that. So I'm going to put up probably some placeholders on the website. But the next engagement that I know for sure is going to be probably the FOMC live. So that's in about 9 days. So the rest of this week, I'm going to be off. There won't be any live streams the rest of the week. I will miss CPI. So if you guys are trading CPI, be careful. I like to do that live with everybody so we can get in on some opportunities and maybe just try to give some insights where I can. But you're going to have to take care of yourself on that one. So be careful with CPI. We don't know what's going to happen. Nobody knows. So that's going to be the big market driver. So I'll be back probably, I guess, a week from Wednesday, something like that. If all goes to plan, and if, anything can happen. You get passports get stolen, planes get delayed. I might end up being there another week or so. I don't know. So if in fact that does come up, one of the things that you can check out my X feed, Shane V_trader. I'll probably be giving you some updates on the travel and the trip there. If you need an update on the stream schedule and things, but Shane V_trader, you can find me there. And other than that, it's just going to be a lot of travels. I probably won't sleep for about a week. So next time you see me, I'll probably look 5 or 10 years older. Let me see, Andy Tong, call into the UK and buy you a pint. Hey, it's not a bad idea. I don't think I'd have to look at my plane schedule, but I don't believe I go through the UK. I believe I go from Butte, Montana here to Frankfurt, Germany, and then Frankfurt, Germany to Greece, and the same trip back. So Butte to Denver to Frankfurt. It's like a 10-hour flight. I don't know, man. I'm going to have to try to get some sleep. Let's see. T Marina, maybe you'll share another quick tip vid during your morning run while over in Europe. Maybe. I don't know how I'm going to deal with the time change, guys. It's like 8 or 9 hours difference from here. So I'm gonna be struggling with that. I got to figure out a way to watch my Grizzlies, my football game. So I got to figure that out. So I got a lot to do today, just paperwork and getting ready to travel. But I do appreciate everybody that's coming into the streams. We've got a lot more users now. There's a lot of folks out there that tune in, and I really enjoy it. I love the interaction with the traders, and it's really important. So, just because we're not streaming every day, it's not a goodbye. I'll be back. Don't worry. I'll be back. But if something does happen and I do get delayed, I would appreciate you guys coming back around probably later this month. And all the videos are there and everything's there that you really need to learn and trade. That's about it. Let me see. Stay up to fight the jet lag. Yeah, I don't know how it's going to work, Eli. I got a hotel, and I got one with a gym, so I can hit the gym when I get in immediately. That's number one. I'm going to the gym this afternoon, so lift heavy today, go to the airport tired tomorrow, try to sleep on the plane, and then when I get in, I believe it's Wednesday evening, when I get in, then you got to hit the gym again, and then the next morning sleep and then try to eat a big meal and then try to get at least some cardio in the next morning. Just flush everything out. Air travel is really tough. You guys will find out the older you get. Man, it can be really challenging on the jet lag. Let me see. Steve Francis, hi Shane. Have a great time in Europe. It will be hot in Greece. It says it's pretty warm. It's going to be, I believe, in the 80s, but the humidity is going to be relatively humid as well. So it should be an interesting trip. I'm looking forward to meeting the people. I always get a kick out of local cuisines and things. Try to broaden my horizons. But I am probably going to be homesick about 3 days in. I'm probably going to want to come back to Montana. Yeah, you know how it is, guys. You miss your families. You miss your family when you leave them, so that's for sure. All right, everybody. Fantastic session. Thank you for all the questions. Thank you for all the support over the past couple of years. I see some names. Folks have been watching these streams for years now, and it's been really my pleasure and really an experience of a lifetime to get to share some of the knowledge that I've accumulated over the years from basically losing money. I mean, there was an old saying my Uncle Gary told me when he was my mentor. He's who taught me and got me into this business. And he said, you learn from losing. You learn from losing. Remember that. Just because you lose a trade doesn't mean you're a loser. You learn from losing. We don't make the same mistakes twice. Every time we lose, we learn something. We're paying for information. We're paying for information about the market, and we're paying for information about us. And as long as you look at trading along those lines, we don't make the same mistakes over and over again. We evolve and we grow as traders. You guys can be successful. I mean, every single person in this room can be successful. I don't want to hear any more of it. I get so sick and tired of it. 95% washout rate. Yeah, nobody makes it. Yeah, pretty much everybody has a real problem hanging around and lasting over the long haul and being a trader that actually makes money out of the markets consistently. But a lot of those are self-inflicted wounds. And a lot of people quit before they ever get to where they need to be. So take your time, learn at your own speed, keep coming back. You can do it. Now, the last thing I'm going to say is this, and then I got to get going here. I'm rambling. The number one thing that you always have to remember is you trade on your terms from a position of strength. You trade on your terms. You don't trade on anybody else's terms. You trade on your terms. You stay within your means, and you make sure that trading is enhancing your life and it's not hurting your life. That's the bottom line. And if you find that trading is just too much, hey, listen, some personalities aren't built for it, can't handle it, too stressful. If it's hurting you, stop. There's no shame in that. There's no shame in walking away from the markets. I mean none. Go find something you really love to do. But if you love this and you want this, it's there. It really is there. All right, guys, I got to go. You guys have a fantastic week. I'm going to be back. I'll be back in the saddle. I'll probably put a couple placeholder streams in the How to Trade trading room later today. We'll also be coming out with the Switch Markets newsletter tomorrow. That's going to be hitting. So if you're a Switch client, that's going to be delivered right to your email address. Check out the Switch Markets channel. We'll have our trade of the week. I'll break that down probably this evening. And I don't know that we're going to get a trade idea out today on how to trade. There's just too much to do. All right, everybody. As always, it's been a pleasure. Until next time, trade the action well, and we'll talk soon. See you.